Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and rate-locked homeowners right now are in financial hell. Or are they really? Because I think a better appropriate title for this video would be, we are currently experiencing the greatest divide in home ownership in history. If you purchased your house middle of 2022 on, essentially owning a house right now is extremely toxic. You basically overall have no equity growth, you have super high interest rates, and you have a payment that more than likely a lot of people can barely afford. Now, if you purchased mid 2022 and before that, right now you have super low interest rate, you have a record historical low mortgage payment, and more than likely you have an abundance of equity. So there is a massive divide right now in home ownership. And really, you guys, that's what we're going to explore today. Now, the conclusion of this video, we're going to talk about what you should be doing if you're in one of the three categories of future homeowners. So I'm going to talk about what you should be doing if you're currently purchasing. I'm going to talk to you about what you should be doing if you're on the sidelines because you're forced on the sidelines, whether it be on affordability or credit. And then I'm going to talk to the future homeowners like myself that are on the sidelines right now, waiting out the housing market. So I'm going to talk about all three of those things. And if you guys can, do me a favor, understand I'm not a financial advisor, even though my bio is as a Dr. Crash Bro, someone that's trying to warn America, like, hold up right now. Purchasing a house, let the Federal Reserve do their job. Owning a house right now is like never before in history. The toxicity, the fake dream of home ownership is running rampant right now. And you guys, honestly, it's driving me absolutely bonkers. And for the bonkersness of my channel, you guys, please, for the love of all that's holy, like this video. And I want to hear from you, you guys. Please comment below, share this. Either way, I hope you guys find an overwhelming amount of value in today's video. The name of the Zillow article is Rate Locked Homeowners Nearly Twice as Likely to Not Consider Selling. A recent Zillow survey found that homeowners who report buying their home at lower mortgage rates are less likely to sell their home and move. And the first thing is when I first read that little snippet, y'all, I know what you're thinking. Obviously, Zillow, tell us something we don't already know. After hitting record lows at the end of 2020, mortgage rates have dramatically risen over the last couple of years, now hovering around 6 to 7%, and for some people, y'all, even 8%, compared to the below 3% rates seen in 2020 and in 2021. And I'm going to go on record right now and tell you guys that's one of the reasons why we have the problem that we have right now. It's not the high interest rates, it was the extended period of time for low interest rates. Moving on. For homeowners with low mortgage rates, these increases imply additional financial costs to moving to a new home, even one at the same price point. This increased cost of transactions can often keep them locked in to their current home in what is known as rate lock, as homeowners wait for better rates, oftentimes resulting in a holdup of housing supply. And we see that with new inventory from existing homes, or rather the lack thereof of new inventory from existing homes. So we actually can see this happening right now. Moving and selling would mean prepayment to the current mortgage and remortgaging to a new home at significantly higher rates, resulting in stronger incentives to hold off on selling their home. In other words, guys, what this is essentially saying is a lot of sellers right now can't even afford to sell. And mind you, this is talking about that first category of homeowners who are in relatively good shape. And why are they in relatively good shape? They have historically low mortgage payments, historically low interest rates. Even if they didn't buy within the last 5 years, they could have refinanced into a 2, into a 3% interest rates. Those homeowners that can't afford to sell, they're in better shape than they realize, especially if they hold off and wait to when they can afford to sell, which is going to happen again when interest rates go down. The question is how much demand will come flooding back, and how quickly will mortgage rates lower. The next part of this article is absolutely mind-blowing when I read this, you guys. Homeowners who report mortgage rates below 5% are nearly twice as likely to want to hang on to their current home. Okay, big deal. Who cares about that? Let me go on. Mortgage holders who, as of June 2023, said they have rates higher than 5% are nearly twice as likely to have plans to sell their home in the next 3 years to those with lower rates. Okay, that makes sense because there's not as big as incentive to hold. But listen to this, you guys. These homeowners face no or relatively little financial disincentive to trading their current mortgage for a new one. In fact, and listen, here's the crazy thing, of homeowners who reported plans to sell, 47% of homeowners paying a mortgage above 5% already have their house listed for sale. When I read that, y'all, to me, when we read something like that, this should be a huge shocker. This should be a huge wake-up call for that category of people that are buying right now. And I'll tell you at the end, in my opinion, what we should be doing if we are buying right now. But 47% of people with a 5% or higher mortgage rate already have their home listed. What does that tell us? We know that mortgage rates never even got that high until about July-ish of last year. So that means of the new homeowners, recent homeowners, roughly 50% already have their home listed. You guys, how is that not buyer's remorse? That's absolutely crazy to me. The inventory that we do have is from the same people that have recently purchased. This is absolutely insane what's going on. It is so unhealthy, but back into the article. Compared to 20% of those with rates below. On the flip side, homeowners already paying a lower interest rate may be reluctant to move and refinance at higher rates. Again, that's the golden handcuff effect. If you purchased prior to about mid-2022, you have golden handcuffs. If you purchased after mid-2022, you have toxic, overwhelming debt handcuffs, whatever those are called. I don't know what color that is. What should we call that? There's a massive difference of owning a house mid-2022 and on compared to before. This goes into it. The split between those reporting a 4 to 4.99% and a 5 to 5.99% rate reveals the greatest divide in homeowner intent to move. 41% of homeowners at 5 to 5.99% consider selling, while only 26% of those between 4 to 4.99% consider selling. The article goes on, most of today's mortgage holders would need to remortgage their new home at a higher rate than their current one. Obviously, that's why people aren't refinancing. It doesn't make sense to refinance if you're going to refinance into a higher rate and into a higher payment, unless for some reason you needed to refinance because you were forced to, whether loan terms or if you needed to cash out. According to our survey, around 90% of mortgage holders reporting having a rate less than 60%, and about 80% of mortgage holders reported having a rate less than 5%. So 80% roughly of mortgage holders have a 5% rate or less. You guys, that is absolutely crazy. What does that mean? As mortgage rates hover just shy of 7% in the past month, most of today's mortgage holders would be forced to finance any new home at a higher rate than their current one, an incentive to hold onto their home rather than move soon. A recent study by 2 finance professors found that mortgage lock can happen even without increasing market rates. In general, moving is costly. Even if the market rate is equal to or even slightly below the current rate, homeowners have to weigh whether the benefit of financing a new home at even a similar rate is worth it when you add the cost of moving. So can you guys start to see why we have such few existing homes come onto the market? There is a lock-in effect happening again, but as more and more of those locked-in golden handcuffed sellers sell, the market starts transitioning into those higher interest rates, 7 and 8%. Now, you guys understand the primary reason that I think that, overall purchasing right now is a horrible idea is I think that we need to go into recession to even sustain. And by going into recession, it's going to lead to job loss, and people generally don't prepare for job loss. The reason I think that is I just can't see any situation to where instead of a recession, wages go up enough for the regular person to afford the new normal. I just don't think that's practical. Locked-in mortgages impact housing supply. Even though this locked-in mortgage effect may not be a direct experience for first-time homebuyers, current homeowners reluctant to sell does have an impact on housing supply. When homeowners with low mortgage rates are hesitant to sell their houses, it does result in a shortage of housing options, resale supply, homeowner mobility, and places upward pressure on housing prices. Now, I'm going to read this part above this real quick because I think what we really need right now, what's really missing, is we need to extinguish the toxic home buying. And that's why the rates are this high. But let me read this last little paragraph right here so you guys can kind of understand like how strong that toxic home buying really is. Because the fact is, as this points out, 1% change in interest rates reduces moving rates by 9%. So basically, if rates went up 5%, that means moving rates are down roughly 50%, and also purchasing power is down roughly 50% as well. Now what I want to do is I want to shift on over to some, realtors and investors in real estate who are starting to understand that right now is actually extremely dangerous to purchase real estate. You guys, it's super refreshing hearing people like this, acknowledge, hey, if you're gonna buy, be cautious. Let's listen to what they have to say. Only 1 minute.
It's a struggle for every buyer and a struggle for every seller. Like they really have to look and say, what am I doing? Do I struggle to stay where I am and just wait this out? Do I struggle to buy, overpay if so, get this high interest rate, pray that interest rates go back to 3 and I refinance my mortgage? Which struggle am I willing to take on? And every family has to sit down at the dining room table and decide that, right? Like they have to decide a budget, like they have to decide all these adult things they have to do. And it is a struggle, and people really are suffering. So it's not a good time for real estate overall. Not the absolute worst. In my career, it is the worst in your career.
Yeah. I'd say it's not great. I mean, people can't get mortgages, insurance is becoming astronomically expensive, as is, food and gas, and people are really plagued with high prices to boot, highest ever median home price. So it's really, we're getting all of these things at the same time, and it's the first time home buyer especially is suffering.
The challenges to real estate buyers and sellers right now are probably the greatest ever, but you know what? They're really interestingly still in the game. So in prior times, right, in 2008, people just kind of said, I'm off the table. I'm not buying anything. Now people are saying, you know what? I really want to buy a home. A home is important for me, and I'm going to do whatever I have to do and jump through whatever hoops to get that home. It's interesting. It's really a sticky market.
And that is an interesting dynamic, essentially how important it is for some people to buy a house no matter what happens, no matter what the price, no matter what the payment. If they can get it, they have to get it. Very interesting dynamic, but I will note the reason why people weren't purchasing in 2008 is a couple reasons. Number one, they took away credit to buy houses through the Dodd-Frank Wall Street Reform and Consumer Protection Act. So they literally wiped out mortgages temporarily to redefine the entire industry, and half of America was in danger of going into foreclosure. And that's why home buying demand back in the day, anyways, was extinguished. Now, in conclusion, what do you guys do with this information? Now, the first thing is I want you to understand, as far as loan officers, remember, it's their job to tell you if you can buy a house, not if you should. And it's the job of a realtor to sell you a house, not to tell you not to buy a house. So there, again, is 3 categories of future homeowners. First category I want to talk about is if you're actively purchasing right now. Now, there's a few things that, in my opinion, we should be doing if we want to purchase a house right now. The number one thing is affordability. We need to make sure that if we are buying a house that's overvalued at a 7 or 8% interest rate, that we could truly afford it. Maybe 25% of our income goes towards paying our mortgage, something low like that. And then the next thing is we have to purchase, in my opinion, best way to get through this if you're purchasing right now, have a 10 to 15 year plan of having to stay in the house. So if you have the mentality you cannot sell, You cannot sell the house for 10 to 15 years. All right, you're going to be in better shape. Now, the third thing we should be doing if we're buying right now is finding properties that cash flow and that have wedge. Second category of home buyers is if you're on the sideline, but you're forced on the sideline, whether it be because you just can't afford to buy or maybe your credit is low. Now, remember, what you should be doing on the sideline is, number one, improving your credit. When it comes to improving your credit, the biggest thing you can do is stop the bad from happening. And then number two, work utilization ratio on credit cards, making sure you're not charging that much on your credit cards. And if you are charging, having that balance under 30% of your credit line. The second thing is saving your money. If you're forced on the sideline, understand a lot of people, most people, if they just spend their money differently, if they understand how they're spending money, they can save more money. So please, you guys, understand how you're spending money, because the second thing you should be doing is saving your money. Now, the third thing you should be doing, again, it depends how you're spending your money, but you should be making as much money as possible. What do I mean? Overtime, bonus, and commission. Second job, self-employment. Remember, work as much of those things as possible, because generally you need a 2-year history in order to use that as qualifying income. Why is that important? Because it increases your purchasing power. And understand, you guys have time. Work one step at a time. Stay encouraged. Stay hopeful. Now, the last category of future homeowners is like me. I'm on the sidelines because I'm waiting the housing market out. Now, the first thing that I want to be doing is constantly increasing my purchasing power, credit, income, assets. The second thing is I have made goals. Again, I'm actually meeting with my wife this weekend, and we're going to revamp all of our personal and business goals. So the second thing you should be doing, you guys, remember, understand what you want. What is your goal? Affordability, moving a certain location. What is it that you want? And the third thing is, if you're on the sideline, remember, educate yourself on your local housing market, because my housing market is different than your housing market. And other than that, guys, I hope you guys got some overwhelming value, insights, and perspective. And if you're out there investing in real estate, you know I wish you luck, and I hope you win.